Hey, friends, it's time for another weekly outlook of markets and profile from the team here at TRADEWITHPROFILE.com. My name is Josh. I'm founder and head educator with Trade Profile. We are a skill development firm specifically focused on traders who want to develop skill in an intraday basis on futures. Specifically, we work in NASDAQ, ES, Russell, and Crude. Those are the products that we're going to look at, as well as a couple other things that are in play. And this is kind of a way to start the week out, to start having a plan, having some expectation of what we're looking at in the week ahead. So with respect to this week, these are kind of the three core themes that we're looking at in terms of earnings. We got OPEX at the end of the week. And there's going to be a lot of chatter about whether the Fed pivots and what does that mean, even for somebody who's looking to express an intraday basis. So look, with that, let's jump into it, shall we? And so first thing that we're going to do is look at the calendar and just get a sense of what potential catalysts might be out there in the week ahead. The big one last week was CPI. It continues to be an inflation-dominated narrative. And why is it inflation-dominated? Because that is impacting what the Fed does. And if there's one kind of key principle that we understand in the markets is you don't fight the Fed. And so from a overall direction of what the markets are doing, the Fed is still against equities and trying to take us into a situation where there's less demand, reduce the inflation. And the little hint in all of this, I don't have a lot of time to go into this, but really what they're going after is they're trying to stave off a sovereign debt issue. So that's what all this is all about. That's why does anybody matter? It's because the Fed sets the rate that the United States can issue debt at. And so if that rate starts to climb, all of a sudden things like national debt and debt ceilings and things that really don't matter a whole lot in a normalized environment, but in a inflationary environment, they matter and can really impact, I think, the biggest risk to all of our markets, and that is the United States would have a credit default. So that's why there's even movement happening between central banks, why the Bank of England is looking at stuff and so forth. So that's some of the macro environment and could lead to this whole idea of a Fed pivot, which would mean that the Fed feels like, hey, we got enough done so far, what we need to do. We don't have to keep on this path of rate hikes. So we're going to find the next rate hike at the beginning of November. So we still got a couple weeks out. Right now, the story is earnings. Okay, so CPI last week. Looking at the calendar this week, what are some of the key catalysts that we have to look forward to? Anything that we want to point out? Not a lot that I'm looking at that's significant on Monday. I mean, the budget balance, that's not really something that is a huge deal. Watch any of these CPIs. We had CPI for the U.S. last week. That is going to be CPI for Europe. That could be impactful. We do have Beige Book and Bullard on Wednesday. We do have some housing starts. As we often talk about, anytime you see releases that are all clustered together right there before the open, kind of watch those prices. Same thing on Thursday. We've got Philly Fed. We've got initial jobless claims. Those are all in play. Pay attention to whenever there's a Fed speak when the market is open. So we've got really, looks like the only Fed speak during the week is Williams on Friday. Other than that, they're going to let us go. And Friday is OPEX. So that will be, it's not a quarterly OPEX, it's just a monthly OPEX, but there'll be options expiring on Friday that will certainly impact what's going on. The bigger story is earnings. Okay, so let's talk about a couple earnings that are in play this week and are set to kick us off. So we have some banks and brokerages on Monday. So Bank of America is on Monday. Tuesday, Netflix, Goldman Sachs is in play. And then I think it's Wednesday. Yeah, Wednesday we have Tesla. So that's really the largest cap company that's reporting this week, and one that we're going to talk about later when we get talking about specific ideas that we have for the market. So that's the broad context of the calendar in terms of leading up to OPEX. OPEX can always kind of pin things in terms of prices. Also, when you're in an earnings environment, there can be a less directional certainty unless kind of everything is bad, right? So, so far, we'll see how that all plays out, but that could be a pretty whipsaw type environment as we look at the week ahead. As far as whether we get a Fed pivot or not, that is going to be the thing just to kind of look. That's kind of like the headline risk right now. Is the Fed going to change their stance and what they're going to do as far as what the how many basis points they're going to rise? They're still predicting, in the Fed Fund Futures and the CME Active Strike Tool, still showing us that we're expecting that the Fed is going to watch or raise rates, for the foreseeable future. In fact, if you go to the Fed Watch tool, you can just do search for CME Fed Watch, countdown to the FOMC. Really cool tool that the CME has that is great to kind of have in your radar. But this is the current expectation of what the expectation is at the next Fed meeting. So really looking at, if the target rate is here, we're looking at least 50 basis points. And then as far as the probabilities going out, so still expecting a rate hike at every meeting through 2023. Okay, so no expectation of easing through 2023. So this is, if you want to have some place to look at, and you hear stuff on the financial news, if you want some place to kind of home base back to, this is the one that will update the fastest, because this is based off what the Fed Fund futures are doing. All right, so that's a cool tool to have in your toolkit as you're thinking about markets and what's going on there. Okay, so with that being said, let's start talking about specific products and get an idea what we're doing. We're going to start by talking about the S&P and kind of see where we were relative to what we were looking for last week and what expectations for this week. As we get to the week ahead, we're starting here at a monthly chart. And a couple things just to point out as we start here. We're going to get looking at the quick sheet. And the first thing that I want to highlight is the posture. So 5-day equal to the 20-day equals to price. Essentially, we're at balance with all of kind of the key references. And so ES is kind of primed for a move. When we look at that more specifically, we see some more interesting things. Still looking at about 160 points for the week, 72 points per day, and 35, 96, 3650. So basically from 3600 to 3650 is the quote unquote balancing range. That's a good range to watch as we start the week. As we go and look in terms of how we behaved, you'll notice we made new monthly lows. This is the CPI range, by the way. That's the 30 seconds off the CPI range. Significant and massive range. No doubt you read about just how big the ranges were. I think it's somewhere about 7% if you consider all of the intraday oscillations. Could be higher than that, like fourth or fifth largest ever, whatever. But note how the interplay is of significant references. We got back to monthly VWAP. Here is that 5-day at 3600. Here's the 20-day at 3650. So we're right in this area. Now the 90-day is up here. All right, so that's kind of the next kind of key reference. And I do want to step back real quick and just look at a longer term chart just to remind us of where we are overall and what are some more significant references that we're coming into and where did we bounce. So we bounced hard off of the push off the CPI lower, and that actually takes us back to the range right before the election in 2020. Note also that we've got the pre-COVID 2020 high. That's kind of the next node right here that we're looking at. So that's, in terms of next references lower, that's kind of the next spot. Big references to the upside, 3,900, 4,158. Okay, so those are the big upside. You can see we're kind of in the middle. Definitely reacted off the lows. Looks like we should be able to push higher from here, given that we've got some volume higher. We're now back to the low of last week or last month. We do have some buying excess here, so we would expect that to hold. However, significant pullback on Friday and right back into this range. We're going to look at this a little bit tighter on some smaller time frames. We did hit our target for the week, which was 35.24. We hit that right on after the CPI. You can see the massive range. Couple things to note behaviorally off of this. Note how the auction moved from balance. So we were balanced before CPI, pushed away from that, and then came back. And then notice that the auction doesn't then fail there, but it goes higher. And why is that? This is a very important behavioral auction behavior to understand, is that when the auction moves this far lower and comes right back to the scene in a very short form, I mean, we're looking at 2-hour periods. So in about 6 hours, we're right back to where we went, and it's from 35, so 100 points. When that happens, you just told everybody we can't go lower. So that also fuels the squeeze higher that takes us up to monthly VWAP. All right. And then that was on Thursday. Friday made new highs as expected, but then cut back into the range to close pretty close to value and in pretty much a neutral perspective. So overall for this week, we're kind of stuck. We've got an early chop zone and we've got two really key prices here that will dictate, where do we go next? Taking out this low is going to take us back toward the pre-COVID high. Okay, taking out this is going to push us towards 3,800, towards 3,900. So really going to be keying into the highs and lows of this week to give us a sense of where we are. Should be kind of an inside out perspective. To start the week, just looking here at the intraday market profile graphic, this also explains to some degree why did we see such a massive pullback on Friday after the big ramp on Thursday. Well, one, this is looking inside of that auction, right? And we see two distributions and a whole lot of singles here from that key price. Notice where we paused. That's not a coincidence that we paused there. Why is it not a coincidence? That is the most traded price. So that should pause the auction. When you see composite high volume nodes, that should pause the auction. That's why we have them as part of our plan. Now, where are we? This is still in play. These buyers are still in play. However, there's some counter activity that shut that off. So for the auction to keep going higher, we really need to kind of get above 3660 on Monday, holding 35, basically 3,600 to be able to push up and go this direction. I think that's the path of least resistance. However, if we get into here and get vulnerable, we can challenge this buying excess and then open the door lower. And part of what opened that door is that this was so strong in buying, no one expects it to go lower. So that can bring in some, kind of animal spirits, as it were, as we go back that way. So that's what we're looking at as far as the start of the week. 3,600 is going to be really important, can be really choppy between 3,600 and 3,650. Above 3,650 will push higher as we would expect. And, higher, we do have some pretty good references as well. We've got a naked VPOC up here at 36 or 3768. This is a prior balancing range that would put us back in range of on our way to the 90-day. Okay, and that's all totally within the weekly expected high. The weekly expected high is way up here, but if we push that way, we can easily get up into that direction. So that gives us kind of a plan for the ES, as it were. So as far as what we're looking for there. Balanced auction, 3650 is the hinge. Above, looking for 3750. Below, and then we're looking for that 2020 high. Okay. So that takes care of looking at the ES. Let's go look at the NASDAQ, shall we? And get an idea for what's going on in that product. Again, similar ranges, but not too dissimilar in terms of what's happening. Have noticed a little bit greater weakness in the NASDAQ than we have seen in the ES. And as we look at the NASDAQ, you can see they actually ate a little bit more back into that CPI range on Friday than the ES did, actually closing below the most balanced range. So below the weekly pivot here. Looking on a weekly basis, got all the way back below a weekly VWAP. Below the most traded price here, still holding this CPI. But to get real confidence in this thing, we really kind of need to get above this zone to push, and that would put us back pushing toward the 20-day up there around that 11,300. And then above that, we do have a prior weekly VPOC around 11,600. On a 30-minute basis, looking inside the profile, you can see they almost closed the singles from Thursday. I'd expect that those are likely going to get cleaned up on the reopen or early on Monday. And really, until we can get above these prices right in here. So really, until we get above 11,000, it could chop to be somewhat scary to the downside. Above that, we can push, and we've got a balancing range just like the ES has above that we can push for, especially if we get some relief happening in what's going on. So as far as key ranges that we're looking for and prices, little bit more of a bearish posture because the 20-day is so much higher, but still looking at about 250 points per day. A lot of range, 560 points for the week, lots of range and opportunity. And watch that 10,850 is going to be early reference, 11,320, up towards the 20-day. If we can go later, you can see that the 90-day is even higher than that. Just remarkable opportunity. Same kind of behavior here that happened in the ES. When you have balance and the auction pushes away, we had a really big gap open on that CPI reading. Pushing back in this direction builds confidence to squeeze in the other direction. So even though the ranges are big, you just have to key into what's happening behaviorally and adjust ranges to what environment you're in. Okay. Deeper pullback on Friday. A lot of this was just driven by burning off hedges is what drove all of this. So once that's out of the way, the real weakness starts to step in. We'll have to see, where we are overall after this week. I'm, kind of watching, just like with the ES, where are we relative to the high and the low? Above, up here, we're going this way. Now, to the downside, what is kind of the next key reference that we're looking for there? Let's go look at the NQ. And here's the 2020 high. Now, we're not quite there. Notice that there's a really big composite low volume node that's in here as we are now fully inside of the bracket from the 2020 election. We're now testing the low. We talked about this in prior sessions where we said, hey, when you have a prior bracket like this, if you get back inside, the probability that you'll go and test the other side is high. And that's essentially what we've done. Now we're at kind of a spot in a macro low volume area that we would expect the auction first time out to push back in this direction. You can see that 12K is a significant price, as well as 13K are significant upside. And really, unless you get above that pivot way up there at 13,500, sell the rips, right? Is it conceivable that we go all the way back down here to the most traded price pre-COVID? It is. And so I think, be prepared for that. And I think this is where we talk about that whole pivot thing. If we get a pivot, that could be staved off. If we don't, and we keep the pressure on from the Fed standpoint, these are the prices that we ultimately go. I think the next reference is going to be that pre-COVID 2020 high, all right? Especially if we can't hold the bottom of this bracket. So those are references to the downside that are still out there. I think watching what Tesla does will be insightful as we go into the week. You can see that, here we pushed up to that prior low, and that's where we rejected on Friday and took us back here. So can go either way. I mean, just looking at the composite, it doesn't favor being aggressively short. Okay. So we're going to lean into this buying excess and look to see if we can go higher before we fail. Especially as you go to OPEX and kind of burn off some hedges, but that's what we're looking for in the NASDAQ. Okay. Russell. Got a couple prices to pay attention there that we're looking for on a long-term basis, and didn't quite get to what we were looking for in the Russell this week. We were looking for 1,600 as a downside reference. Watching last month's low, we retested that. Look, now we have a pretty poor low overall in the Russell. I am expecting that to ultimately break and take us down here towards 1,600. In fact, we've got another reference down here that we're going to be looking for. Pretty balanced, right? So there's a pretty good balancing range here in the Russell. From the middle, watch for attempts either direction. Very similar story to what happened in the ES and the NASDAQ. Watch the extremes. That should tell the tale of which price do we go to. I think above that, we work towards last month's VPOC. Below, we push towards new lows and kind of clean this up. In terms of references that we're looking for to the downside there, go look at the Russell here and zoom out, and you'll see a very prominent node right here at 1565. That's the magnet, and that should hold the auction to the downside. So we could get a really nice little flush down into this. That should hold and then give us a pretty good boost back to the upside. So that's the ultimate downside target we continue to look for. That should hold. That's a multi-year bracket. In fact, the more you zoom out here, the bigger you'll see how big that node is. That should really hold the auction and chop around in that area. So could explore more to the downside given the fact that you've came away from that price and come back to it. So it could bounce and then push this way. But initially, you're going to look for it to test back up before it comes back down. Then we'll kind of have to see where we are from a macro perspective in terms of where everybody is as we're going forward there. Okay, so that's what we're looking for in the Russell. Real quick, want to talk about crude and what's happening in that space. And the story there is still, a lot of movement. Not very excited about how crude performed last week. I was really looking for us to continue higher off of the nice ramp at the end of the week and then push in this direction. We didn't. In fact, we rejected right back. We had a really strong push right back to these composite nodes and rejected. That makes that vulnerable, and that says, hey, 83.50 is the downside target this week. So that we should hit there unless, for some reason we stop right here at this poor low and rotate back higher. Ultimately, what that means then is that we've got a product that's continuing to, essentially fight between 85.60 and $90. So we're about in a $3 range that we're just stuck in until we resolve out. Below that we would look at this bracket. Above that we'd look at this bracket. Right, we can see kind of where the ranges are that we're trying to kind of work from. So should we be able to break here? That is the destination. Could go and test 82 to the downside, which then now puts us back to the low of the month and could open us even further. So, your crude bulls really do need to get back above $88. Ideally, we would get above 89.73 to make an attempt towards the highs of the month. All right, what did that look like on a weekly basis? Clear out my charts there. It looked like just failure almost all week. Part of our plan this week was we were looking for early pullbacks after all of the strength of the week prior to then get long in this direction. And we got back to last week's VPOC, which, did give us a reaction as we'd expect, but then we failed off of it, right? We kept fighting, could not get above it, and ultimately failed back here to close the week on the lows. That's, again, informing why I think 83.50 is pretty much going to happen. So definitely looking for that. Now, from there, the range is kind of from 83.50 to 8,900. I'm sorry, $89. If this doesn't hold, then we're looking for new monthly lows. Okay, so that kind of gives us a plan for what we're looking for in crude. And just going back and looking in terms of ranges, still looking at $1.88 per day, $4.19 for the week. Kind of a mixed posture. And that 83.50, that's the 20 days. So that makes sense that would be a reference. We'd go down there and then balance around there to try to pull value lower as we move in. So all good there. All makes sense. So we're good to go there. Okay, let's talk about some additional products and ideas that are in focus as we're going forward. And one thing that I continue to keep in mind as I'm looking around the space is just to pay attention to the VIX curve and what's happening there. We are continuing to be in an inverted stance, and that just means that we're trying to put in a low. It's similar to what we did back in June, where we flirted for some time to try to establish a low before we ramp. I think the same thing is in play given where we are on the composite reference, but it could still stay in this area, take us down, tag that 2020 pre-COVID low before we push up in this direction. So just be mindful of that. But I'm still looking. I'm on reversion watch, a good reversion lower. And this is where that Fed pivot thing comes in. If the Fed says, pause, or we're going to do less of a rate hike than expected, that's going to give us a reactive move higher. It's not going to ultimately put in the big low that everybody's looking for because there's just too much headwinds in corporate earnings. But that will give a nice push back up towards, really could go up to that 3,900 reference that we're talking about on a really good reversion. Could happen post OPEX. So keep that on the radar. That's something that is definitely still something that I'm tracking daily and watching as we go ahead. Another one that's in there is Tesla. We talked about they've got earnings. We looked at them last week. I'm kind of keying into this range that Tesla's in, we're not gonna look at the long term chart, but we're looking at this chart specifically and really measuring from the backdrop of this key breakout, right? We're not quite there, from kind of 150. That's the post split share price, to 25 has made a significant push lower. We're going into earnings. I think there's an opportunity to trap some sellers, especially if we can clean up some of these lows. So we're definitely still looking for this. I am in some put credit spreads that I sold last week that are around the 195 strike. So looking to hold those back through earnings as implied volatility goes higher. So that's one play that I'm looking for that's interesting to me. The other one is JP Morgan reported on Friday. And you can see that they now have, they bounced higher off of that earnings, but in kind of a range. So I'm going to look there to sell a strangle in JP Morgan for the next, 30, 40 days as their implied volatility collapses. So, I'll see what kind of ranges I can price it. If I can price it kind of 124 to 96 would be ideal. There's good inventory prices to support that. And then I'll just kind of let this thing play out for the next couple weeks and burn some theta there. So that's the other kind of key idea that I have. So, looking at the VIX reversion, looking at Tesla through earnings, and then also this JP Morgan strangle. I'm gonna look to put that on immediately after the open on Monday. Try to be priced in that bracket range. Okay. So that's some ideas that we're looking for. Focus some development ideas as far as each week we try to look at a way to just get better at reading the auction and thinking about the auction. And this one, I want to remind you of kind of a key principle, and that is that the bell curve is your friend. And what do I mean by the bell curve is your friend? Well, in auctions, and when we look at profiles, what are we trying to do is we're essentially trying to map human behavior, and human behavior is fairly predictable, if irrational, fairly predictable, and can show up in a way that it looks ultimately like this. And in fact, if you just study statistics, anytime you have a distribution of prices, what will ultimately happen is that the auction will have a sample size and then there will be a mean in the middle. Okay. All a profile does is just flip that. Okay. And what's fascinating is that when you go and you look at the intraday prices, look how often we find these. This is crude. Look how often we find these distributions. Okay. This is that behavior in play. This is why this stuff works, because it's mapped to human behavior. In fact, on Wednesday before CPI, we had what was called a perfect profile. We didn't take out the IB high or IB low, and we traded across the middle in all 30-minute periods of the session. Okay, so the bell curve's your friend. What does that mean? It means that whenever you're looking at an auction, you have to think, what gets me to a bell curve? Now, the nuance and the challenge of that is looking across what time frame is driving that. Now, clearly on Wednesday, it was just within that time frame is why it was so tight. What's happening right now and what happened on Friday? What explains why it pulled back so much? There's doubtless people who are like, well, how did we pull back so much on Friday? But if you understand that the bell curve's your friend, when you saw how big this push was, and it's, if I think about a bell curve, it was imbalanced to the upside. What happens on Friday? We get higher prices and then we backfill. So essentially what are we doing? And this is the composite right here. What's this thing doing? It's building a bell curve. It's getting to equilibrium. And this is why we also look at postures of the auction. When you have an auction that's got prices equal to the 5-day and equal to the 20-day, you're essentially at a bell curve over a monthly basis. And that is a predictive stance for the auction to make its next large move. Okay, so whenever you're looking at the auction, always be looking at what's the structure doing, and this is why I look at TPO charts during the day. Why I look at a market. In fact, this shot right here is what I'm looking at most of the time throughout the day, because I can see where are there anomalies in this, where there are things that are likely to backfill, and where there are going to be holes, such that you can see. In fact, if we were just to pop this out, we can just even see spots where it will backfill in as it's building it. When you look at it from across the 30 minutes, you can't quite see it as well, right? But when you take this down, oh, now all of a sudden I see it. You see the difference there? Like when you expand this out, you're like, oh, it's just trending lower. I don't really see how we're building a bell curve. Oh, but when I go like this, it makes sense. That also saying is that knowing where you are in the bell curve can really help you from your trade location. Okay, so if I'm down here and the bell curve's above me, what kind of trade location do I have? If I'm trying to be short, I've got poor trade location. Okay. Now, however, if I have a bell curve that looks like it's going to continue to go this way, is it good location to be long? No. Where would be the good trade location? Is it once I get to a spot where it's got that equilibrium to the downside and you're starting to see a 45-degree angle, it's going to rotate back in. That's good location using the bell curve. So just remember, the bell curve is your friend. Wherever you are, know that. And a couple questions to think about is one, where do we need to trade to get to a bell curve? Across which time frame? And then, are there anomalies in the structure? When I look here, clearly on Friday, when we see these single prints here, and that's what we call poor structure. There's a distribution, a big intraday gap, and then another distribution. This is poor structure that if we get back into it is likely to get clean. That's why I think on the reopen, we're going to fill this in on Monday. So watch that. Watch us try to fill that in and see if the buyers that started this base step back in to rotate us back higher. Given that where we are in a 5-day basis on the bell curve, we're now below this. So we could fill this in a little bit and then attempt to rotate back in that direction. Okay, so that structure is your friend. This is something we talk about in our development pathway. It's very important to understand structure. We spend that in module 13 talking about structure really around the bell curve. Okay, so remind that the bell curve is your friend. Those 2 questions. I'd love to know what you think about that. Also, 2 other things. The 4 questions, whenever you're looking to express an idea, know what those 4 questions are. Where's the opportunity? Where's the risk? How will I know that I'm right? How will I know that I'm wrong? Very important. And then as you're building skill, a couple ways to continue to interact with us. 1, use those 4 questions. 2, interact with us on Twitter. 3, if you'd like to have an audit of your approach, a no-cost audit just to get some insight, happy to do that. You can schedule that through the contact page on our website. The link is attached to this video. If you want to see what structured development looks like and you've been through quote unquote trading education, you're like, it's all junk. I get that. I've seen it myself. If you want to see how we're different and we approach it differently, consider spending a week with us as a trial of our pathway. The products that you've seen us push out here, Edge Clear and Window Trader are who I do mock-ups in. Great platforms. I'm not compensated. We're not compensated in any way to recommend them. They're just great people, and they really want your success just like we do in these markets. And though, finally, for those of you who are working through the pathway, again, I told you guys this last week at the end of the week, but I want to reiterate it here. I was really excited that given the fact that we had such a massive move on Friday, I didn't hear any panic. I didn't hear anybody getting blown out. I saw a lot of people deciding it wasn't for them. They got to the sidelines. This is excellent. We are really in exceptional markets, and there are really exceptional dynamics at play. And the fact that you're kind of staying grounded in all that, I think, is a great mark that you're going to do well as we go forward. And whether this all resolves and gets us back to a more normalized volatility environment or not, we don't know. I mean, there's cases for, there's cases against. I think maybe there's a little more cases against than for. Either way, looking at the auction structure and looking and keeping the bell curve as your friend will put you in a position to do well. So, hey, thanks for watching. If this has been helpful for you, I'd love to know how it's been helpful or what insights you've got from that. Thanks for sharing it with your friends. And we'll be back next week with another edition. Be looking for reaction off earnings this week. Be listening for the whisper of a pivot. And we'll see what OPEX brings to the auction. Thanks for watching, and we'll talk to you soon. Peace.